Dato Sri Najib has been slapped with 3 fresh counts of money laundering, bringing the total number of charges against the former PM to a whopping 42. According to Bernama, the former finance minister is now accused of receiving 47 million ringgit through his Islamic bank accounts as a result of illegal activities while in his position as a civil servant in 2014. Najib pleaded not guilty to the charges. He is already facing several charges of criminal breach of trust and abuse of power for allegedly receiving 42 million ringgit from SRC International through Islamic Bank, to which he claimed trial in July last year. The Islamic Bank accounts were opened on his behalf by then CEO of SRC International and ex-1MDB Chief Investment Officer Nik Faisal Arif Kamil. Nik Faisal was acting on the orders of Najib's then Special Officer for Economic Affairs, the late Dato Aslin Alias. Sapura Energy blames the undersubscription of its 4 billion ringgit rights issue exercise to cloudy conditions in the market, which had affected investor sentiment at the time. Group CEO Tan Sri Syahril Shamsuddin says various factors, including the concerns over global trade, had caused some uncertainty over the recovery of the oil and gas industry. He adds that sentiment during the exercise was a bit muddled as there were conflicts between US and China and globally on trade. Meanwhile, institutions held back because they were uncertain of the industry's recovery. However, Syahril points to the emergence of PNB as Sapura Energy's largest shareholder, which he says is testament to the group's potential for growth going forward. Despite the undersubscription, he says the group still managed to secure the money, which will go towards paring down its debt level. In tandem with the rights issue, Sapura Energy is also forming a JV with Austria's OMW Aktiengesellschaft, which was approved by shareholders at its EGM today. This will see it receiving up to 975 million USD in cash proceeds. AirAsia Group flew 16% more passengers in the fourth quarter of FY18, or a total of 12.1 million travellers in the seasonally strong quarter. Load factor, or the percentage of seats filled, fell by 4 percentage points to 84% as it expanded its fleet size. Available seat kilometers grew by 14%. For the full year, AirAsia says total passengers carried rose by 14%, reaching a total of 44.4 million people. ASK was up by 14%, while load factor shrank by 3 percentage points to 85%, with total fleet size closing at 224. As for long-haul arm AirAsia X, passengers carried fell by 3% to 1.5 million, and despite flattish growth in ASK, load factor fell 5 percentage points to 78%. AAX explains that it was affected by natural disasters that hit Japan and Indonesia, as well as the gradual route termination for the Kathmandu route and Nepal's ban on workers going to Malaysia. On a full-year basis, the carrier flew a record 6.2 million passengers, up 6% from the previous year, as ASK grew 3%. Load factor contracted by 1 percentage point to 81%. It ended the year with a fleet size of 35 Airbus A330s. FGV Holdings has signed an MOU with South Korea's Samyang Foods to establish a halal ramen manufacturing facility in Malaysia for local and global markets. Group CEO Dato Haris Fadzila Hassan says the collaboration is part of FGV's strategic direction to expand its downstream business via its subsidiary Delima Oil Products. FGV's logistic and support businesses will also benefit from this partnership. He points out that the global halal food market is one of the food industry's fastest growing segments and is expected to reach more than 740 billion USD in value by 2025. Under the deal, Haris says Delima Oil Products can leverage on Samyang Foods' strong R&D and global distribution networks to improve quality and expand the reach for its Saji products. The partnership will also give FGV access to Samyang Foods' supply chain, including cooking oil, vegetable fats, and sugar for its existing ramen plant in Wonju, South Korea. Samyang Foods has over 50 years' experience in the ramen and instant noodle industry. Shares of Siu Wa Corp rose as much as 65 cents or 30% after receiving a privatization offer from the Huang family, who hold a 30.91% stake in the Penang firm. The stock eventually parted some of its gains to close 23% or 50 cents higher at a one-year high of 2 ringgit and 68 cents for a market capitalization of 124.9 million ringgit. At the closing price of 2 ringgit and 68 cent, it is still a discount of 4.48% to the offer price of 2 ringgit and 80 cent per share. Siu Wa announced it had received the offer last Friday. The exercise will be done through a selective capital reduction and a 110 million ringgit capital repayment exercise. It will be funded by internally generated funds and financing facilities. The offer will remain open for the board's acceptance until February 11, 2019.